Good morning, everybody. Hopefully you had a wonderful summer weekend. Got a few fun things to cover today. Oh, let me get rid of this here. Boink. Okay. First thing I want to, well, maybe I won't get rid of that. Let me see here. I have to go back to my pointer. Okay, I need some, I need some technical help, Missy. How do I get back to my pointer?
I think you just need to uncheck it. So go back to that little thing that you were in, the little tool.
Okay.
And then
I tried to.
just,
oh, there we go. Okay. Duh. Sorry about that, guys. This is out of Kiplinger's Personal Finance Magazine. Rest in Peace 60-40 portfolio. Old standby allocation of 6% stocks and 40% government bonds will not work for a buy and hold investor anymore. Well, guys, we know that. Why won't it work? The problem is that yields on bonds are headed lower and lower, and the 10-year Treasury note pays 0.7, 10-year, 0.7% a year, plus the prospect of government policies to boost economic growth increases the chance of inflation. So this was in December of last year, so 6 months ago. Are these things coming to fruition? Treasuries could become more risky as interest rates start. So long-term Treasury funds, how much did they go down the first and second quarter? How much did long-term Treasury funds go down first and second quarter? Some of them went down as much as 15%. So what's a better portfolio allocation? There are two parts of that question. First is who's the investor. Older investors with specific income needs may find that their overall allocation to fixed income might not need to change much, but the kind of fixed income investments they might own need to be different. So guess where they're saying to put the money? Take a wild guess. Where should they put the safe money? Guess where they're saying? Junk bonds. So guys, how does a fixed annuity compare to a junk bond? If interest rates go up, will junk bonds go down in value, guys? Not if interest rates go up. When interest rates go up, will junk bonds go down in value? Absolutely, they will. And if any hiccup in the economy, so the economy is coming roaring back, right? And nothing can stop that economy from coming roaring back, can it? Can anything stop the economy from coming roaring back? Yeah, COVID-19, that's funny. Multiple things, right, Tom? Some of you are mentioning them. Inflation is one. How about, guys, what happened to gas prices when those Yahoo black hatters did ransomware on oil, on that oil company? What's happening with the different governments around the world? There's obviously no wars that could possibly happen, right? I mean, Russia and the U.S. aren't throwing pot shots back and forth at each other in the Caspian Sea. The U.S. and China isn't throwing pot shots back and forth at each other around Taiwan. Japan isn't saying that they're going to beef up their military to fight back against China. Debt increases. There's another. I mean, guys, how many things could go wrong? It could be a COVID-19 or it could be some completely other disease. We don't know what's going to happen. And if that happens, what's going to happen to junk bonds? They're going to get hurt worse or less than treasuries. If you think treasuries are risky, holy crap. Yeah, it's a black swan. That's what we're worried about. Something we don't even know is going to happen can happen. So where do we put our portfolio, our fixed portfolio? FIAs. Why? Why do we use FIAs? How much risk does an FIA have compared to a treasury in today's world, and a junk bond in today's world, a REIT in today's world? How much you don't lose money? And if you don't understand how safe insurance companies are, call Jeff or myself or Jerry, and we'll walk you through how insurance companies are actually safer than a bank with FDIC insurance. Insurance companies are safer than a bank with FDIC insurance. So if you don't know how to do that or have that conversation with a client, talk to us and we'll walk you through it. So this is validating what we've been doing, right? It's just that their choice for fixed is cray-cray. Oh, it happened again. Doo, doo, doo.
Just unclick the highlight one.
I did. Oops. Man, I'm going crazy here. So watch, I go here, right?
Yep.
Okay,
nope,
then
so
how do I unclick it?
Oh, you were unclicked. So
yeah, I was unclicked, see, and it's still doing that. So I'll just use my arrows instead of my button. So 48-year market vet breaks down why a fragile and over-leveraged stock market is on the path towards a 65% drop or more, and warns that investors are misreading the Fed. Guys, 48 years in the market, and he's saying we could see a 65% drop in the market. David Hunter says he sees a huge stock market decline ahead. Hunter says the Fed Reserve is underestimating how much inflation will rise. He says that they will therefore be forced to tighten the policy, which will spook investors. And of course, right now they're saying, "What? Yeah, inflation's going up, but what's going to happen? Once everything mellows out, we'll see that inflation come back down." Guys, how many times have they said that? For example, did they say that about mortgages back in the 2007? Yeah, they're giving out a lot of mortgages. And they're being really loose there, but things will settle down. It'll be okay. How many times first of all, does the Federal Reserve and do all of these corporate investors have a vested interest in telling us that inflation is going to be okay? Yeah. And what's the biggest cost of any company? What's the biggest cost of any company to its including yours? What's the biggest expense in your company? What's the biggest expense in Ford? What's the biggest expense at 3M? What's the biggest expense at the Gap? What's the biggest expense? Every single entity, labor, right, John? Labor. And what's happening to labor costs right now? What is every company begging for? What's every company begging for? Labor. What's the only way they're going to get labor, guys? Outbidding the guy next door. So what's going to happen to inflation? I know they keep saying, yeah, inflation's really high right now, but don't worry, it's going to come down. Bull crap, dudes. Bull crap. Then there's the investor who's underestimating the Fed's willingness to reduce their balance sheet in the case inflation does get too high. I like to point out that last July we were barely a few months removed from the swoon from a second quarter disaster, and yet the Fed felt comfortable pulling several hundred billions off the balance sheet, Hunter said. The central bank could easily decide to take up to $1 trillion out of the system. Because dudes, for the last 10 years, what have they been doing? Pumping money into the system. Eventually they're going to have to what? Take it out. And then there's overall is underestimated for how fragile the market is right now and how dependent it is on the Fed-fueled liquidity. All these miscalculations together, combined with a fragile economy as a result of the pandemic, will prove to be near fatal for stocks later this year. Though he sees an extreme melt up occurring in the months ahead. So he's saying, hey, yeah, the market will continue to go up and up and up. Because, guys, we've talked about this before. The analogy is that you look at somebody and they look like they're healthy as can be. They got a good flush in their cheeks. They get good color. Why do they have a flush in their cheeks and why do they have good color? Because they have a fever and they're about to get bedridden by some sort of disease. So the fact is, every time that there's a market crash, what comes before the market crash? What comes before the market crash? What came before the market crash in 2000? What came before the market crash in 2008? Exuberance, that's right. As for why he envisions the drops to be so dramatic, Hunter cited the heightened amount of leverage in the system in the form of debt and derivatives. Guys, we haven't talked about this for 2 or 3 years. How much of the market, how many derivatives, or what's the value of derivatives in the market right now? Is it the same size as the market? Is it double the market? Is it 10 times the market? Is it 100 times the market? That's right. It's 100 times the market. Derivatives are 100 times the market. What's the problem with that? With the derivatives, if things go, it's just like with 2007. They were using derivatives on mortgage bonds. Were they able to cover the problems with that for a couple of months, a few months, 3 months, 4 months, they were. But eventually what? When you get derivatives, you can kind of hide it, shove it under the rug, but if it goes on for too long, then what happens? A meltdown. A meltdown. Hunter, who started his investing career in 1973 as a portfolio manager, holds views that are more extreme end of the spectrum of how market participants see things playing out. So, admittedly, this article is saying that, hey, this guy is saying things are going to get a lot worse than the typical person. But then they go on to say, but even most other bears calling for signs of a crash ahead do not see stocks falling as much as 65%. But here's the thing. The overall tone on Wall Street right now is a cautious one as investors behave speculatively. Are investors behaving speculatively now? You know, we went through the whole Robin Hood people buying GameStop, but then what did we see last week? What do people expect? Let's see how many people remember this. What does the average investor think the market's going to make going forward? What percent? How many were you paying attention last week? What's the average investor right now think the market's going to perform going forward? What percentage? You guys are good listeners, 17%. Is that, are they being, so is the average investor speculative at this point? If they think the market's going to go up 17%, is that a speculative mindset? So if valuations and investor sentiment extended, index is sitting near all-time highs because of recovery anticipation, many investment banks see little further upside. See, they're saying that the upside to the market has already been valued into the market. The upside from the recovery has already been valued into the markets. See? Goldman Sachs, Morgan Stanley, and Bank of America say stocks are staring down a period of dismal returns with recovery priced in already. But even if there's no hike to interest rates or the Fed doesn't reduce its balance sheet this year, the fear among investors that banks could potentially tighten perhaps touches on the degree of fragility that Hunter says exists in the markets right now. And with indicators like the S&P 500's average price to sales ratio and market cap GDP both at historic highs, a pullback in stocks isn't unreasonable expectation to have. So all this goes to say that, yes, we should have a 40, 60, 50, 50, 60, 40, but we darn well better have a big chunk of our money for our retired clients, not our 20-year-old clients, but our retired clients who we should all be working with. They need to have what? Yes. So main topic today is how we can become better, run our businesses better, run our lives better, become less stressed. So there's an old parable, and it's about two men are walking down a walking path, and they see a child in the river, and he's drowning. So they both jump in to save the child. And then all of a sudden they see another child floating down the river, and they're trying. Then the one guy continues to help the one child, and the other one goes to help the other child. And then they see a third child come floating down the river. And then one of the men just gives up, and he swims to the shore. So what is he doing? What's the guy that's swimming the shore going to do? If somebody stops and says, "What are you doing? You're leaving those children in the river to drown." Okay, some of you are saying, get help. But there's a different answer to this. He's going to run upriver. Why? Yes, Dale. He's going upriver to find out who the heck is throwing these kids into the river to stop them from being thrown into the river. So in other words, we could run circles trying to fix a problem over and over and over and get, for example, has anybody ever seen that clip of Lucille Ball on the candy assembly line? And they start coming faster and faster. Is there any way she's ever going to be fast enough to do those chocolates? No. She should do what? She needs to do what? Stop trying to deal with the many chocolates coming down the road. She needs to run and turn off the machine or find out why they're coming so fast. Does that make sense? So when it comes to problems, we can get so wound up in the problems or in dealing with the problems that we never know what's causing the problem. And we need to start doing that. We need to stop the problems before they start. Does that make sense? And that's what this book, Upstream by Dan Heath, is about. And they actually did a case study at Duke on this particular topic, which is stop problems before they begin. So problem number one that they find is people don't see the problem. They see the result of the problem, like they see these kids in the river, but they don't see the problem of why these kids are ending up in the river. That's the first problem you need to figure out. So, for example, I don't have enough people to see. Is that the problem, guys? In our business, I don't have enough people to see. Is that the problem? Well, that's a symptom, but not the problem. What's the problem if you don't have enough people to see? No process to get, no process to get more people into your office. No marketing. Well, people, I thought when I got my CFP, people are going to magically show up at my door. Guys, is there anything we can possibly do where it's going to make people magically show up at our door? No. So if the lack of people, that's a symptom. The problem is we're not figuring out how to get those people to our door. The problem isn't mine. Well, let's talk about marketing again. Well, why bother marketing? Because you know what? Marketing doesn't work. It's too expensive. It only gets tire kickers and plate lickers in. I don't want to feed people. The leads never return my calls. Guys, what those are all what? What are all those phrases that I just did there? That's right. They're excuses. Saying that what? What is that saying then? If they're excuses, what does that say? Problem isn't mine. It's on them, not me, exactly. Well, I can't deal with it now. I don't have enough money to market. I'm too busy to market. I got too many things going on in my life to market. I got also, and I'm just using marketing. It could be whatever the problem is. I mean, you can't keep an employee because they keep quitting on you. It could be you can't keep clients because they keep quitting on you or they won't return calls. I'm just using marketing as an example as a problem because that's the number one problem we have in this business is getting in front of more people. That's why I'm using this as an example. So I can't deal with it now. Guys, if you can't deal with marketing right now, what's going to happen to that problem? If you can't deal with marketing now, it's going to grow and grow and grow. Because if you don't have enough money to market now, guess what? Your bills keep rolling in. So that means next month you're going to have more. If you don't have enough money to market now, that means next month you're going to have more or less money to market with going forward. Now, here's the great thing. At least with 5Q, do we have ways for you to get in front of people without paying big bucks? Yes. And then you just use those ways to fund your treasury to do more efficient. Because the ways to get in front of people with no money. Now, if you go back to clients and do great jobs of annual reviews and you do a great job of a referral script, that's awesome because that is a very efficient way to get in front of more people. Getting your clients to be loyal to you versus satisfied with you and getting more referrals, that's a great and efficient way to get in front of people. But we also have ways where you don't go back to your clients that cost nothing or very little money. They're not as efficient. They work, but they're not as efficient. They take longer to get those clients. You have to do them for a longer period of time. You have to work harder to do that. But if you don't have money, it's going to take. If you don't have money, you need elbow grease. But once those do work for you, even though it takes a little bit longer, even though it takes a little bit of work, you use that money that you make there to then fund the more efficient ways to market. Does that make sense? But you can't say, I can't deal with it now. And what cracks me up, Jeff, have you ever heard somebody who has told you, I don't have time to market, and yet they're not doing any business?
Yeah, I've heard that. I've heard people say, I'm busy with, my clients keep calling and needing this and needing that, and I don't have time to do any marketing right now. But yeah, they don't write business. Yeah, I've heard that a lot, actually.
Guys, if you're too busy, if you're not making the money you want to make, but you're too busy to do anything about it, call Jeff, call myself, let us walk through. And it's kind of nice to have a second pair of eyes look at your business from the outside and say, okay, here's how we can streamline your business. Here's how we can get you back on track. Here's how we can make your life easier by not being so busy. Okay, does that make sense? So here's some of the pointers they have. Don't let minor irritations go unaddressed. See, small problems left unattended become larger problems. For example, if every time you get in your car, your car winds up and winds up and winds up, but it's difficult to catch the engine to actually start it, or every time you take a left-hand turn, you hear this clunking sound, should you ignore those problems? Because right now, they're not really hurting you. They're irritating, but are they really hurting you? No. But what are you worried about then? That little problem will eventually become what? A huge problem. So if you've got little problems in your business, so if let's say that you got these little problems where people keep calling when you're going through the process of moving them from prospect to client, does the money go over instantly? Does that money go over instantly? When you're moving people from a prospect to a client, does the money go? No, it does not come instantly. In fact, it takes a while sometimes. And you keep getting people who are panicked during that process. And they call, where's my money? I don't know where my money is. If you have people calling you and they're panicked about that, what is that telling you? That's a little problem because you're able to talk them off the edge and get them back on track. But what is that telling you? You got to do a better job of communicating. So what the book said, Upstream recommended, was that if a small problem occurs 3 times, you should what? Let's see if you guys can work through this. If a problem happens 3 times, you should what? Create a system to deal with it? No. What should you do? You should address it, absolutely, but what should you do? What do you have to do first? Just like with the river parable, what do you have to do first? Find the problem. Find the problem. Don't fix the symptoms. Find the problem, and then fix that problem. So, and Jeff, when you've mentored guys, have you ever heard an advisor say, "This keeps happening to me. This keeps happening to me. This keeps happening to me"? Guys, for 8 years, guess what I said? This keeps happening. People keep taking my information and going back to their guy. For 8 years, I said that. How stupid was I? For 8 years, I said, people keep taking my information and going back to their current advisor. How stupid is that? After it happened 3 times, I should have what? Now I finally fixed it, where I figured out a way to make sure they don't go back to their current advisor. But for 8 years, I was saying, this problem keeps happening. If a problem happens 3 times, you need to what? Fix it. Now, if a problem happens once, do I worry about it? If a problem happens once, do I worry about it? I don't. Why? Things happen. Weird things happen. But if a problem happens twice, 3 times, I got to deal with it. Does that make sense? Now, you should need to fix it, even if it takes much longer. Some people will say, I know, but fixing that problem will take a lot longer than just dealing with it. Fixing that problem is going to take a lot more money than just dealing with it. No, guys, it's the death of 1,000 cuts. Because when you add up all of the costs, both time-wise and money-wise, that a problem is costing you, it's always going to be cheaper, both time-wise and money-wise, to fix it. Because otherwise, how long will those problems occur? Forever. So you can't just say, this is going to take a lot more time or money to fix than just dealing with it. No, because you're going to be dealing with it forever and ever and ever. And forever and ever and ever costs a lot of time, and forever and ever and ever costs a lot of money. So if a problem happens 3 times in a row, find the root of the problem and fix it, even if it takes much longer or costs more than just dealing with the little problems. Does that make sense? And you got to focus on the near misses too. For example, let's go back to that what we just talked about, where prospects moving to clients get worried when they don't know where their money's at, because it's taking so long to transfer. Oh, but I saved it. Every time that's happened, I've saved it. I've saved the deal. Guys, is that a near miss? When a client calls up and they're all worried because they don't know where the money is transferring from their current advisor to you, and you talk them off the cliff, you talk them off the edge, is that still a near miss? Yes. So you gotta pay attention to near misses as well. A red flag, sure. So how do you deal with near misses? Well, number one is you can sit down with your staff, give a call to Jerry, give a call to me, give a call to Jeff, sit down with us and say, this happened, how can we fix this? If you don't want to do that, at least when you have a near miss, take a quiet a walk. Get out of the office, get away from the phone, put your cell phone in your desk drawer, get in your car and go to the woods, go to a park, and take a walk and ruminate about what just happened, why it happened, and how you can fix it. Because generally, if we don't do that, what will we do? If we don't either sit down with somebody and just talk it out, or at least get away from all distractions and walk through it ourselves in a quiet environment, what will we do instead? Yeah, that's right, Bruce. We'll repeat the problem. It gets lost in the mix. That's right. We just keep dealing with the curveballs that life throws us by the minute, and it never gets fixed. You got to. That's right, Mark. It just repeats stuff. You got to either sit down and talk to somebody, your staff, or somebody you trust in the industry, and figure out how can we fix that, or at least, at the very minimum, get away from all distractions, take a quiet walk, and deal with it yourself. Don't let it keep going. Use social norms to spur action. Sometimes we know we need to do things, but we don't do it. There's all sorts of a multitude of things that we don't do in life because we think it's all sorts of reasons. The example they use in the book is this, that people do preventative dental work. Why? Because if you knew somebody didn't brush their teeth every day, what would you think about that person? If you knew somebody didn't wash their hands after they went to the bathroom, what would you think about that person? What would you think about that person? Would you think more of them or less of them? Do you think of more of them or less of them? Yeah. So people brush their teeth because it's a social norm. People wash their hands because it's a social norm. In fact, they've shown this, that if there's somebody else in a public restroom, what happens to the chance people are washing their hands? If there's somebody else in the restroom, what's the chance that they're a little bit higher or a lot higher? Yeah. So social norm. So how could we use social norms in our business? And this is what they say. They say sometimes you have to trick yourself. Sometimes you have to trick yourself, or at least frame problems better to help spur action. So how could we use this particular thing, social norms, to spur action? Well, when it comes to marketing, we could think what? Everybody's doing it. If I don't do it, guess what? The guy across the street is doing it. I better what? Yeah, fear of missing out. You use the fear of missing out to create the urge to do something. If you're not dripping on people, you think, well, if I'm not dripping on my competitors, the number one reason people leave their current advisor is lack of communication. If I don't have a way to communicate with them on a monthly basis and touch them 1, 2, or 3 times at least, my competitor might be doing that and I might lose my best client. So I better what? I better do it. So if you start to think everybody's doing something, it makes you want to do it too. Because if everybody's marketing and you're not, what's going to happen to you and your business? If everybody's marketing and you're not, what's going to happen to your business? It's going to go down because your clients are going to be attending some of those or reacting or responding to some of those other marketing, and you're just going to, again, die a death of 1,000 cuts. You need to be growing your business because if you don't grow your business, it's going to be dying. So that's one way you can trick yourself and say, everybody's doing this, I better do it as well. It's normal. And I know Jerry's had conversations with lots of guys saying, Should you market when you have enough money, guys? Should you market when you have enough money? It's a trick question. Should you market when you have much money? That's right. No, you should not market when you have enough money. Marketing should be what? When you look at your ledger of your expenses, marketing should be what? Optional, or it should be in your ledger every single month? It should be constant. That's right. And again, maybe right now you can only afford $100 a month, but that $100 a month better be there. If instead, and we've got, we have some great guys on the system. They've been in the system for 7 years. I'm thinking of one guy in particular, 7 years, and he keeps saying what? When he has enough when he has enough money, he's going to start marketing. And then he'll close a big case, and then what happens? That money goes where? To marketing, or it goes someplace else? All those other things that he was going to do once he had more money. Because if you want something to work, you need to do it what? Occasionally? So if you want a beautiful lawn, should you mow it occasionally? If you want a beautiful lawn, should you put on weed control and fertilizer occasionally? Success comes through what? If you talk to any billionaire, any millionaire, they're going to say success came how? Consistency. That's right. Consistency. Right, John? Does that make sense? So marketing should be, and again, you don't need to spend thousands of dollars every month. If you don't have thousands, don't. But there are ways for you to inexpensively get in front of people, and that should be in your plan every single month. What else can you do when you find problems or prevent problems? Is you find out who should be responsible for preventing that problem. So can we fix it? Yes, we can. If you can fix it yourself, fix it yourself. Because if you're hoping somebody else is going to fix a problem for you, what's going to happen? You're going to be sorely disappointed. So you need to learn to fix things that you can fix yourself. But if you can't fix those things, then what do you need to do? If you can't fix those things, then what do you need? That's right, ask for help. You need to delegate it. Find the person, the right person, to be able to help or fix that problem up front. So I'm a salesperson. I'm not good at follow-up. So I had Missy who would follow, and we had Judy who would follow up with people, letting them know consistently where their money was. So when they're going from a prospect to a client, knowing that it's going to take 1, 2, 3 weeks to get that money moved, guess how often that person was contacted during those 3 weeks? Every few days. Every few days. Just to say what? Hey, we're on it. Here's where it's at. Hasn't changed, but it's on this person's desk. It is moving along. And it's, I've bought and sold, I think, 7 houses in the last 20 years. So I've dealt with a lot of real estate agents. Guess what my number one problem is with the real estate agents? When they're marketing your house, what's my number one problem with the real estate agents? That's right. They don't communicate with me. So if my house is for sale and I haven't heard from them for I understand houses don't sell the day you put them up, but it's been 3 weeks and I haven't heard from the real estate agent, guess what my assumption is? What's my assumption if I haven't heard from the real estate agent? Are they trying to sell my house? Yeah, no activity. They've moved on. They're finding another client. All that person needed to do is shoot me an email every couple of days to say what? Here's the activity in your neighborhood. Here's what's, it wouldn't take that long. And it could almost be a blanket message sent out to everybody, and I wouldn't know the difference. I want to know what's going on. So you need the right person to do that for me. And my office was not me. I'm not a detailed person. But I found the right person to call these people every couple of days, every 2 or 3 days, let them know what was going on, or send them an email, letting them know what was going on with their money. We haven't forgot about your money. Your money is not lost. We're tracking it. Here's where it's at. Does that make sense? So Suggestions from the book. Be patient. Be impatient for action, but be patient for outcomes. So that means what? You got to take action. Take action takes actions. But sometimes when you take actions, it takes a while for those actions to fix them, to fix the problem. So for marketing, to go back to that, you got to take action right now. Does that mean you're going to be there's going to be a deluge of people coming to your office next month? No. Marketing builds upon itself. You got to start now with activity, and then it will start to build and build and build and build upon itself, so that 3 months from now is when you're going to have a deluge, not a week from now. Start small. Again, we'll go back to marketing. Do you need to, if you don't have any money, do you need to spend $5,000 on a seminar? Would that even be wise to spend $5,000 on a seminar? No. Because if you don't have enough money, does that tell you that you've really locked down the selling system? Or maybe you could work on motivational interviewing, work on the scripts a little bit better. Because if you have no money, that means the system is working for you or not working for you. That you're a master of the system or you're not a master of the system. You're not. So I don't want you spending money until you're a master of the system. But you got to start doing something to start practicing the system. So start with something inexpensive, get in front of people, and make your skills get better and better and better, so that when you spend $5,000, you have how much of a worry that that's going to be a problem? None. That's right. Do you think I have any worry? Do you think I'd have any worry about spending $20,000 on marketing? Me personally. Yes, I have a lot of money. Let's say that I was down to my last $20,000. Guess what I would do with my last $20,000? Guess what I do with my last $20,000? I had invested in a seminar. That's right. Because I have how much worry that I'm going to make that back and more? None. So if you're worried about your skills, get your skills up and spend a smaller amount of money. Use more elbow grease to get in front of people. But you got to take action. But it's okay to take small actions. You don't have to swing for the fences. Get a bunt. Get on base. Does that make sense? We have lots of ways for you to bunt and get on base, to hit a single. Big changes start with small ones. Big changes start. Big changes start with small ones. They're smart ones too. Monitor your course. How often should you be looking at your business? Constantly. You should know how much you're spending. You should need to know how many people you got in front of, how many of those people moved to a first meeting, how many of those people moved to a second meeting, how many of those people moved all their money. If you don't have those numbers, what you spend on money on marketing, how many people showed up at your first meeting, how many of those people went to the second meeting, how many of those people moved all their money, what do you know about your business if you don't know those numbers? If you don't know those numbers, guess how successful you're going to be? You're flying by the seat of your pants. Could any successful business succeed without knowing how much they're spending, how much they spend to get a new customer? Of all the people that walk through the door, how many people are buying? If they don't know those things, how successful are they going to be? Not very. So if I called you today and said, okay, here's what I need to know: how much you spent on marketing in the last month, or in the last quarter, or in the last year. How many people did you get in front of? Okay, of those people you got in front of, how many went to a first meeting? Of those that went to a first meeting, how many people went to a second meeting? Of those who went to a second meeting, how many of those moved all their money to you? I guarantee you, if I did that with any of my top 10 guys, guess what they'd be able to tell me? Yeah, just a second here. Flip, flip, flip. Click, click, click. Okay, here are the numbers. Bada bing, bada bing, bada bing. If I go to my folks that are struggling, they have a lot of talent, but they're struggling, and I ask that question, guess what I get? I'm not really sure. And it's a shame, because they have a ton of talent, but because they don't even know what the problem is, they don't know how to fix it. See, with those numbers, if I find out that I'm spending a lot of marketing and not getting in front of people, what would I do? Spending a lot of marketing and I'm not getting in front of people, what would I do? Change the marketing, right? Okay, so now I'm getting in front of a lot of people with my marketing, but none of them are coming to the first meeting. What am I going to do? So I'm getting in front of people with the marketing, but none of them want to go through the process. What am I going to do? Well, hopefully you call Jeff or myself and we'll help. If you're getting in front of people and they're not going to a first meeting, Jeff and I can help you. Because what's happening is you're not giving them a call to action that's making them come to the first meeting. Now, if you're not getting people from the first meeting to the second meeting, what are you going to do? What gets 100% of people that follow this process, what gets 100% of people to move from a number 1 to a number 2? You should all know this without even thinking. What gets people, 100% of people, to move from the first meeting to the second meeting? No, first meeting to the second meeting. It's not trust their guy. They're going to trust their guy. The first meeting to the second meeting. Mark's got it. Tom's got it. First meeting to the second meeting, guys. What gets them, 100% of people, to move from the first meeting to the second meeting? Mark and Tom got it. It's the 6 goals. It's the 6 goals, guys. They come in for one thing and they leave with how many number 5s? 1 being not concerned at all, 5 being extremely concerned. I have a burning desire to get this done. I want it done yesterday. Number 5. How many 5s should they have? Out of the 6 goals, how many 5s should they have? Guys, you need to go back. That's right, Mark. They should have 5. 5 out of 5 goals. 5 out of 5 goals, because it's not all 6, because there's 2 of them in there. 2 of them in there that aren't going to get people to move forward, but one of them has an extra one. So guys, if this is a mystery to you, all the changes we've made in the last 20 years, 2 decades, all the changes we made in the last 2 years, the goals are the number 1 change we made. And we made it about 3 years ago. And guys that have followed the goal said, my life has changed. It's become so easy to get them to give me all their information. It's so easy to get them to move from the first meeting to the second meeting. Everybody's moving. Not only are they moving, they're chomping at the bit to move. If this is a strange conversation to you guys, go back. Let me just do something here. You got to go back. You got to go back to the site. If you do nothing today, this is worth this whole call right here. Go to the process, go to the agreement meeting, and watch the video, the agreement meeting video, and more importantly, look at the goals script. Oops, I'm showing not having it up there. Go to the agreement meeting, watch the video, go to the goals script. Look at the close script. In fact, the goal script, guess what gets people from your marketing to move to the first meeting? The goal script. Guess what gets them to move from the first meeting to the second meeting? The goal script. How good should you be at the goal script, guys? How good should you be at the goal script? The goal script gets 100% of people to be in the process. You can't do a 21-point checklist unless they opt into the process. You got to be awesome at this. Got to be awesome at this, okay? So if this is brand new news to you, guess what you need to do today or this week? Go back, watch the video, get better at get good at the goals. Get good at these goals, okay? It's only 3 pages. It's not forever and ever. It's 3 pages. You got to be awesome at this. Make sense? Cool. So I know I'm yelling at you. Why am I yelling at you guys? Why am I yelling at you? Because it's summer. It's summer. It's summer. When should you be working on these skills? Now. You should be planning your marketing now so that you can be doing things in September. Because if you wait till September, your marketing is virtually done. You got 1 month that you can maybe do something in before we get into the holiday season. You need to be planning your marketing now. And then once you've got your marketing planned, you need to be doing what? Making sure that you have the skills to get them to move all their money. The first thing is to know the 6 goals. The second thing is to be proficient. You don't need to be perfect, but be proficient at the 21-point checklist. Just being proficient will make you a ton of money. But guess how much, that's a lot of scripting. The 21-point checklist is a lot of scripting, but the goals isn't scripting. It's basically asking them a few questions And so guess how long it takes somebody to learn how to do the goal script. The 21-point checklist, that can take a year to learn that backwards and forwards. But guess how long it takes somebody to learn the goal script? It should take you no more than 1 or 2 days. So is there any excuse for you not to be fluent on the goal script, guys? Make sense? Super. So guys, I can't, you are my business. I appreciate you guys immensely. 5Q wouldn't be in business if it wasn't for you guys. So I love you guys. I want to help you guys, but I can't fly to your office and do these things. So what I can do is push you to do things that are going to make you better. Okay? So that's all I can do. So I'm not yelling at you. I'm hopefully giving you reasons to get more active and get more involved and take more responsibility in your business. Is that fair? Awesome. Then you guys have a wonderful rest of the weekend. Please, if anything, go to that goal section, watch that 30-minute video on how to do an agreement meeting, because you can use those tools in your marketing as well to make your marketing work better. So you get double duty. Not only will it get everybody to move from a number 1 to a disclosure meeting, to a number 2 meeting, it also can be used in your marketing to get them to move to a number 1 meeting. Make sense? Oh, the book name is Upstream. Book name is Upstream by Dan Heath. Super. You guys have a really good rest of the week, and we'll talk to you all next Monday. Thanks, everybody.